Hello, everyone, and welcome back to Sudden Wealth. I hope you're preparing for the weekend. I hope this week was good for you guys. If you do enjoy the content, please consider dropping that like and subscribe. By the way, tomorrow there is a live stream that I've scheduled in order to go through basically what happened this week, what I expect to happen the following weeks, up to the end of the year, and also a few takes on the upcoming year as well. I am studying, depending a bit on the weeks, I'm studying the possibility of doing one live stream in the middle of the week on Wednesdays, like I usually do, and one to basically wrap up the week on Saturday evening. But of course, if it's a very quiet week with nothing happening, I'll probably skip that one. But we will see. We'll see if it allows for more of you to join. Then hopefully we can have a few discussions. That doesn't need to be all about stocks and crypto and whatever. We can also have some discussions about other stuff if you want. So in that context, by the way, please drop that like and subscribe when you come to the channel. It's the only thing that I ask of you. It greatly helps the channel. So I'd like to thank you in advance. So in case you guys want to go back to the tape, last Friday, I said our stock's about to bottom. I did think we're gonna have a strong week this week. That feeling was maximized by having Peter Schiff predicting a stock market crash. That's always a very good idea to go the opposite side because he's consistently wrong on everything. So it was just one of many stock market predictions which are completely mistaken by him. We actually had one of the best weeks over the past 20-something years. I was expecting us to, as you remember, we were below the 4,200 level in the S&P. I was expecting us to go into the 4,200 handle in the beginning of the week, which I think we did right on Monday. I even made a video on Monday saying, did the stock market just bottom? And the answer was yes. And basically that we should be moving higher back to the channel, the famous channel that I've been talking for so long, between the 4,200, 4,600. Surprise, surprise. What has stabilized as well? The bond market. Bond market stabilizes and goes up. Stock market follows. Surprise, surprise. Not for anyone in this channel. You guys already know how the deal is. What else? Gold is pretty much down over the week. Peter Schiff was predicting that we're gonna gap up and go to new all-time highs. Another great prediction made by him. Now, I think what's happening right now, particularly today with the jobs report. So the jobs report came in softer than expected. We actually lost, in terms of household jobs, we lost 358,000, which is the worst since April 2020, and you all know what was happening at that time, right? In case people don't know what that is, they call people's households and ask, do you guys have jobs? Yes or no? And basically they derive the conclusions from there. The Fed also mentioned today that growth is slowing down. Again, the same perverted situation, we are all aware. Bad news for the economy, good news for the market. Stock market and economy have nothing to do with each other for many, many years. Now, why was I so convinced that stocks would recover this week? I'll tell you why. It's not a big secret. What have I told you before? Keep it simple. Look at simple stuff. Tune out the noise. Check a bit the sentiment and go from there. For example, everybody was bearish. Everyone and their mother. Their banks saying we're gonna go straight to 3,900 in the S&P. CNBC, everyone was down. Bloomberg, everyone was down. YouTube, the Great Depression talks again. And the world will be just like the movie Mad Max in 2 weeks. This kind of stuff. So the question that remains is actually quite simple. If everyone is bearish, everyone sold. If everyone sold, what else is left to do? Buy. What a big surprise. And then actually I just looked at the charts, and what did I see? I saw the S&P 500 very close to the 200-day moving average, and I saw the NASDAQ 100, which has been the leader of the market, so I put more emphasis on that one than the others. I saw the NASDAQ 100 hitting the 200-week moving average. So basically, we were on the extreme down part of a channel that has been going on almost the entire year, and we were in very key moving averages. I knew that inflation numbers would come out in Europe, and those will tell the Fed what to do because they are using them as a proxy. So basically the Fed, I was very convinced the Fed was not going to move rates that much. I thought that earnings that were coming out were actually going to be quite good, and I was expecting that finally you were going to be able to see a softening of the market, of the job market, which basically the job market has not been strong like people advertised on TV. Okay? Why? Because when you actually go and look at full-time jobs decreasing brutally, but part-time jobs increasing, and people getting second and third jobs because one job no longer pays for the bills, that is not a strong jobs market. But they post that new jobs were created, that unemployment is going lower, etc. I mean, you need to think about this, right? What is better? One full-time job or two part-time jobs? One full-time job. But for the statistics, two jobs will appear as created versus one. So the statistics side, if you don't actually pay any attention to the underlying data, is actually a positive. But once again, you just need to learn how to check the data. For next week, I do expect us to consolidate a bit, to tighten the ranges. I don't think we're going to see 5 days up or 5 days down. I think we'll probably have a bit of a pullback because we went just straight vertical. And I do expect us to move sideways for some time. The Russell, which has been the underperformer, kind of outperformed in the past few days. And why? Well, if there's an ongoing narrative that the Fed has stopped hiking, which I would say that's very likely, because I get the feeling that inflation numbers will come out lower as well. We'll see. But I think there's a good chance that we've seen the peak in rates, and that which means that by not increasing further the rates, the bonds are getting a bid. The Russell 2000 is filled with regional banks. If bond yields come lower, that will give more stability to the banking system as well, particularly the smaller banks, which means Russell should recover because it was the most beaten up index. That's it. Now, I do think we're gonna see this trend going on in the sense of bad news for the market, bad news for the economy equals good news for the market. Again, I think people are starting to price in rate cuts, but rate cuts, this needs to be said, are just like the Bitcoin halving. Buy the rumor, sell the news event. So basically, everybody will push stocks with the expectation of the rate of the rate cuts, but when actually the rate cuts happen, for a brief period of time, I think for a couple of months, you actually see stocks going down quite aggressively. This is something people always forget, but the reality is money supply is always linked to the performance in the stock market. Once again, and I've mentioned this before, if we do have rate cuts, I think that actually will be deflationary rather than inflationary. But we'll see if I'm right. In any case, guys, by the way, that oil price call that I had, you remember, end of September, 28th of September, we got oil price WTI crude oil at 95, and we are what, at 81, something like that. So it's still holding, despite all that is happening, very unfortunately, in the Middle East. So with that, I'll leave you be, guys. I'll catch you in the next video, talk a little bit about crypto, and I'll catch you in the next one.